Hi dear traders, I'm Maria Stardup and this is the review of crypto analytics from FxCo. It's the 8th of December today, Thursday, and in our today review we will start with some crypto industry news. We will speak about miners, and then we will get to technical outlook for Bitcoin first, and then of Ethereum. Let's start. We will start with an article by Sebastian Seliger, and first some news from crypto industry. So difficult market conditions continue to affect the Bitcoin ecosystem, with mining difficulty dropping to its highest level since July 2021. The difficulty adjustment of 7.32% took place on December 6th, marking the sharpest drop in difficulty in over a year. This coincides with a decrease in the average hash rate. In the third quarter of this year, the increase in the production costs of new bitcoins coincided with a decrease in the value of the cryptocurrency. Rising energy costs have further impacted miners' margins in the US and Europe, leading to the closure of some operations. Bitcoin miner revenues fell to two-year lows in late November, and all this eventually led to the capitulation of some mining operations, which accounts for the recent difficulty correction. So these problems miners incur really affect the market in general. And now let's get to the technical outlook of Bitcoin and what Sebastian says. Bitcoin has been testing the local trend support line located around the level of 16,700. So there was no breakout below the trend line. Nevertheless, the momentum remains weak and negative. The next local technical support is seen at 16,020. There is no indication of the downtrend on Bitcoin to terminate or reverse yet, so the next target for bears is seen at the level of 13,563, 2019 high. So the downtrend on daily and weekly and 4-hour time frames continues without any indication of a possible trend termination or reversal. So far, every bounce and attempt to rally is being used to sell Bitcoin for a better price by market participants. So the bearish pressure is still high. The key long-term technical support at the psychological level of 20,000 had been violated. The new swing low was made at 15,555, and if this level is violated, then the next long-term target for bulls is seen at 13,712. On the other hand, the game-changing level for bulls is located at 25,367, and it must be clearly violated for a valid breakout in the long term. Well, let's have a look at the chart for the moment. So today it's the 8th of December, and what can we see at the chart? Right in the beginning of yesterday, Bitcoin fell from points above 17,000 to 16,800 something, and so far it has not been moving anywhere. It opened the day at the point 16,844. And now it is trading at 16,796. Okay, And now let's move on to Ethereum and the article by Dean Leo. The technical outlook for Ethereum. Let's have a look at the chart. On the 4-hour chart, the overall bias for Ethereum is bearish, like Dean says. The price is now above the Shimoku cloud, which might indicate a short-term shift to a bullish market, expecting price to possibly break the first resistance at 1,308, where the 38.2 and 78.6 Fibonacci lines are before heading towards to the next resistance line at 1,384. In an alternative scenario, price could possibly head back down towards the first support line at 1,071, where the previously swing low is. So Dean's trading recommendations are the following. Entry 1,308, reason for entry, first resistance line. Take profit 1,071, reason for take profit, first support line. Stop loss 1,677, reason for stop loss, slightly above where the second resistance line is located. Well, let's have a look at the chart of Ethereum for the moment. Again, the trajectory is similar to Bitcoin. It fell right in the beginning of yesterday, and also it's not moving anywhere from points 1,228, 29, 27, 30, and so on. It opened the day, today 8th of December, at 1,232, and now it is trading at 1,225. Well, that is all for today's review, and we will see each other tomorrow. Please ask your questions, write your comments. We will be glad to answer them. And see you next time. Bye-bye.